welcome to this episode of Hardman Talks. My name is Larissa Adams and I'm part of the Investor Communications and Marketing team here at Hardman. A very warm welcome to our viewers and to our guest here today, Mark Northway, Chairman of the UK Individual Shareholders Society, ShareSoc. Mark, thanks for joining us.
Larissa, thank you very much for having me.
It's a pleasure to have you, Mark. So can you tell us briefly what ShareSoc is?
By all means, ShareSoc is a not-for-profit organisation, membership organisation run by investors for investors, and we focus on the plight of the individual investor in the UK, and we try and do various things for those investors, effectively championing and empowering them. We do that through a process of lobbying, and we do that through information, through education, and through networking.
Brilliant. And these are really important initiatives for the retail investors, where a lot of the time people don't know where to go or whom to look for that type of support. So it's excellent. So moving on, tell us a bit more about the key services ShareSoc provides members with, and what are the key benefits that come with those services?
From a membership service perspective, we provide a newsletter, a regular newsletter, which tells investors what's going on in the market, things that we think are relevant to them. We run a blog. We run a series of forums. We have, on the educational front, what we call the ShareSoc Investor Academy, which is a set of web resources, which are currently being boosted by the creation of a basic information video, which we'll be promulgating later in the year. And we run events. We run a large number of events, which essentially put investors in front of interesting speakers, in front of masterclasses where we present key investors and allow them to explain their investing philosophy, in front of companies, which is the sort of backbone of what we do on the event side. So those are the member services, if somebody is looking at us from the perspective of what do I get for my money. But laid over the top of that, we watch what is happening in the market. We watch the way that market players are behaving, whether they be government, whether they be regulatory, whether they be companies, financial intermediaries, or indeed investors. And if we don't like what we see, we get involved, and we do that through lobbying and campaigning, series of formal campaigns. And so we are intervening on behalf of not just our members, but of individual investors as a whole. So part of our membership joins us with the thought process that they're paying a fee and they're getting a series of services back. And others join us with a view to supporting us in our activities of ensuring that the environment for the individual investor is as good as it could be, and that the experience of the individual investor in the UK is as good as it could be.
Brilliant. And it's great that you've touched on your campaigns already, because we know that ShareSoc is well known for its campaigns on behalf of retail investors, and one of those most recent ones being the Woodford Campaign. And I think that was launched to support and protect the regulatory rights of investors and seek recourse for those who lost money from their investments with Woodford. So can you just tell us a bit more about that one? There's
a couple of interesting components to that campaign. The first one being that it is, of course, fund investors. So it's important to realise that ShareSoc is not just focused on those individual investors who buy shares, but also on individual investors who come at the market through funds or through investment companies. And the second thing is that here we have actually endorsed a legal claim, which is a first for ShareSoc. So our approach to Woodford is simply to say a lot of individual investors lost collectively a very large amount of money. There are things that have gone on there that deserve a degree of scrutiny. And if that scrutiny turns up, first of all, wrongdoing, and more importantly, if that scrutiny turns up wrongdoing for which there may be successful legal redress, then we think that is something that individual investors should benefit from. So our campaign looks at essentially all three of the Woodford funds: the patient capital, the equity income, and WIFF, and looks at the situation that investors find themselves in each of those. So far, the only legal claims that have surfaced have related to equity income, and there are, to our knowledge, 5 legal processes that have started so far, or that are being put together so far. And we've taken a look at them and evaluated the claim, who the claim's against in each case, what the proposal is in terms of the return of any recovered monies to investors, the reputation of the companies involved, and we have elected, on the basis of our due diligence, to endorse a claim by legal firm Lee Day against Link Financial Services, and so our campaign is really about making sure that investors are aware that that process is ongoing, giving them a forum to talk to each other and to talk to us, and facilitating their involvement in that legal process.
Thank you for those insights into the campaign. And there's another one, the Shareholder Rights Campaign. Tell us what's wrong with the current system of holding shares, and what would you do to...
Okay, the Shareholder Rights Campaign is a long-running campaign, and it's really an all-embracing campaign. There are various things that are issues in the UK landscape for shareholders, and we are of the view that these are things that need to be addressed if we're going to make individual investing more attractive for the UK retail, the UK consumers. And you've alluded to one element of that, which is the nominee holdings system. In the UK, most people who are buying shares buy them through brokers or platforms, and the majority of those platforms use nominee holding companies to hold the shares. Under UK law, the legal owner of the shares, and therefore the member of the company, is that nominee holdings company. It is not the end investor. So we have a strange situation where individuals are buying shares which they think they own, and legally they don't own them. And neither do they legally have the rights, the rights that come with legal ownership, in particular information and voting rights. The Companies Act is flawed in that it does allow for the concept of information rights, but it makes those optional. So it creates a mechanism by which information rights can be transferred through the nominee holding company to the end investor, but it doesn't make that mandatory. And any system which is not mandatory essentially doesn't get implemented. So we have a strange situation where companies are unable, first of all, to identify their shareholders or their beneficial shareholders, and secondly, to communicate effectively with those beneficial shareholders. So we have laws that require the production of, we have laws that require AGM papers to be put out, we have laws that allow that require proxy forms to reach investors and allow investors to signal their views, and that process is broken in both directions. Not only can the company not effectively communicate and engage with its retail investors, but those retail investors cannot effectively execute their rights as owners. It's not quite as simple as that, because most brokers will allow an individual investor who wants to vote to do so, but it involves that investor knowing that a vote is coming, requesting the relevant documentation, filling it out, sending it back through, and it involves the nominee or broker facilitating that process. There is a big difference between a company offering free fridges and not telling anybody that it's offering free fridges, and a company sending a letter to everybody telling them to come and collect their free fridge. The second will have an awful lot more impact than the first. And what we see in the UK is a system whereby the company is obliged to make a communication. The communication never reaches, or very seldom reaches, the intended recipient, and therefore the intended recipient doesn't react. What happens is that both companies and brokers use this as evidence and say, well, actually, only around 5 or 6% of the shares held in private individual hands ever end up getting voted. And we say, well, that is because the communication and rights system is broken, and the breakage is causing the apparent lack of interest. If you fix the breakage, you'll stimulate an interest in stewardship by private individuals. It's a very long answer to a simple question, but the Shareholder Rights Campaign is broader than that as well. I mean, we look at the way that companies hold campaigns. We look at the way that companies engage with shareholders. We look at things like the special administrations regime, which is the regime that governs the administrations of failed brokerage companies. And we find flaws in that. And part of our Shareholder Rights Campaign is to try and fix the flaws in that legislation to make sure that that individuals are not at risk when the custodian of their shares fails. So there are assumptions that individuals have about what share ownership means, and our Shareholder Rights Campaign is really about making sure that those assumptions are reflected in the legislative framework and in fact. And away from the Shareholder Rights Campaign, we run a series of other campaigns. I mean, you mentioned Woodford. We have one going on with SVS Securities, which is a failed securities company and custodian, to make sure that investors have proper access to their assets. We assisted, it wasn't a formal campaign, but we insisted Serious Minerals shareholders last year, when their company was taken over, in communicating both with the management of their company and with the management of Anglo American, who was taking it over, and in communicating with the regulators and with government and with the press. We have a very active VCT set of campaigns which look out for the behaviour of boards in the VCT space, which is a particular governance black spot, and we've been quite successful in putting resolutions to the boards of various VCTs, which have resulted in changes in the directorship and changes in behaviour in several cases. So we have it's a broad championing process which looks at the behaviour of market participants and tries to hold them to account where we're not comfortable with that behaviour.
Thanks, Mark. That's very well rounded, and I thought it was really interesting how you mentioned and pointed out, particularly with the shareholders, the first campaign, how it affects both the investors and the companies, and the risks that are involved with that. So let me play devil's advocate. Some companies deploy their resources on appealing to institutional investors and think the retail investors as a slight irritant, when in fact there's actually been a lot of evidence to suggest retail investors set the daily trading price of company shares, and there are other important factors in the market. So just tell us, what are companies missing and why are they wrong about the retail investor?
Larissa, we're going to see a slight change of views after the 2020 COVID experience. I think some of your own research pointed to the fact that a large amount of the price making that went on through the crisis was very small orders that were being placed effectively by individual investors, which is effectively to say that liquidity is probably the prime reason why a company needs to be interested in its shareholder makeup and interested in having at least a component of that shareholder makeup represented by individual investors. Individual investors behave rather differently from institutional owners, and they do so because they have an ownership concept. When an individual investor buys a company, very often, not always, there are traders as well as investors, but very often the perspective is quite long term and the approach is quite detailed. And the philosophy is an ownership philosophy. So the investor is interested not just in the financial return, but also in what the company is doing and how it's behaving along the process. And that investor is essentially it's a stewardship process, which is carried out by institutional investors, but in a slightly different way. And it's one that I think some companies regard as a nuisance, but more enlightened companies regard as a positive. So liquidity is one element. Having a shareholder base that behaves like an ownership group and is there for the long term is another one. Having access to fresh capital when fresh capital is required is a third one, although the prospectus regulations occasionally get in the way of that. And so I think what we're finding is that many of the companies that present through ShareSoc to individual investors do so out of a genuine feeling that investor group is important and needs to be nurtured. And one of the feedbacks we have from many of our events is that the questions that those companies, it's usually a CEO or a CFO that's presenting, the questions that they get from our members are institutional in quality, and generally there's an expression of surprise at the quality of question.
Okay, thank you, Mark. So please just tell us a little bit more about your involvement in various consultations.
Yes, we try to engage with any consultation which is relevant for the development of markets, and in particular the development of markets in relation to individual investors. So just to name a few that we have recently engaged with, there's the UK listing rules, the business combination consultation, consumer investments from the FCA, illiquid assets again from the FCA, platform review, open-ended funds. That's a critical one from the Woodford perspective. The use in the UK, the use of open-ended funds across less liquid assets has caused problems both in the property sector and in the illiquid asset sector. And we have a perfectly good investment trust activity in the UK, which is a natural home for those things. So that's an important consultation. The development of the audit markets. We engage with the FCA, we engage with Treasury, we engage with the FRC, or ARGA as it is to be called henceforth. We engage with HMRC. So effectively we have, again, a watching brief as to things that are being decided. I suppose the most important one of all in the last year or so has been the Law Commission review on intermediated securities, which has taken a very close look at what I was talking about in the nominee holdings arrangements, primarily to identify, is there a problem? And if there is a problem, to suggest scoping, to scope effectively studies which will look at solutions. So yes, consultations is a major part of what we do.
Makes perfect sense. So lastly, for investors watching this video, if they would like to join ShareSoc and participate in any of the events or become a member, what is the best way to go about doing that?
We have various levels of membership. We have a full paying membership. We have what we call an associate membership, which is free, and some of our benefits are a little bit muted for those members. We have Signet membership, where we merged with Signet last year, and that's purely a self-educational and networking activity. And then we have what we regard as a supporter base, which aren't members, but they're people who are part of our electronic reach, if you like. But the very simple answer to your question is, if you want to join ShareSoc, go to sharesoc.org, find the button in the top right that says join, and then you're offered the option of full membership, Signet membership, or associate membership. We obviously prefer full membership. It's £45 a year, and it helps us to do all the things that we're trying to do. Most of the work is done by volunteers and by the directors themselves. All of the directors are unpaid. All of the money that comes into that membership pot goes into serving members and serving the individual investor community.
Excellent. Thank you so much for your answers, Mark. It was an absolute pleasure to talk with you today.
Clarissa, thank you very much indeed for having me on, and much enjoyed.
Thank you. So again, if you'd like to get in touch with either Hardman & Co or ShareSoc, please refer to the contact details that will appear on screen shortly. And please don't forget to like and subscribe to our channel. We appreciate your time and thank you for watching. Bye for now.